Hello and welcome to our podcast, The Asphalt Story. Today we want to give you an overview of the Asian and Middle Eastern markets. My name is Irina Vinogradova. I'm a senior manager at Argus Consulting Services, and with me today are Sathya Narayanan, senior reporter of Bitumen Report covering Middle Eastern and Asian markets, and Elliot Chan, analyst from Asia Consulting team. All right, and we will start with you, Satya. Export supply in Asia has been tight since the second quarter of this year. How has this impacted the trade flow and prices?
Hi, Irina. Bitumen exporting refiners in Asia reduced production since this year's second quarter because of strong high sulfur fuel oil, also known as HSFO prices, and weaker export margins. Demand from South China and Vietnam were weak because of higher inventories and limited consumption, which weighed on Singapore waterborne prices. At the same time, demand from East China was also poor, and this weighed on South Korea seaborne prices earlier this year. This pushed many refiners from across Asia to reduce production. We have at least two of the three refiners in Singapore under partial turnaround this quarter, with one of them likely back to normal operations, but they have not increased bitumen output. A key refinery in Malaysia had halted bitumen sales since mid-June because of limited production, and market participants told Hargus that they should be back in October. Two of the three bitumen producing refineries in Thailand had also cut production, while the third one switched to producing fuel oil instead. Similarly, refiners in Taiwan and South Korea also reduced output, with one South Korean refinery currently under partial turnaround. Now, with supply falling, prices started to gain some foothold. Gradually, demand from Southeast Asia increased and supply from key exporting Singapore was not sufficient at that point. This is in the third quarter this year, and importers started seeking other Asia origin cargoes. These importers are from Southeast Asia. This strengthened inquiries for South Korea origin cargoes, whose main market is actually East China. But prolonged low demand in East China made South Korea cargoes available for Southeast Asian buyers. But demand continued to outpace supplies. Consequently, in September, seaborne prices in Asia rose to their highest level since the final quarter of 2023. On the hindsight, we also saw bitumen prices currently trading at a premium to HSFO values. To give some perspective to this, Singapore prices were trading at a discount of about $75 to $80 to the 380 CST HSFO values in March this year, and the price gap widened to more than $100 per ton in July. As of mid-September, Singapore values were trading at a premium of about $48 per ton to HSFO values. HSFO fell in line with crude values, but bitumen prices were supported by firm demand and tight supply. But we are still yet to see an increase in bitumen output in the broader Asian market.
Right, understood. So if supply in Asia was not enough, were the importers able to locate other possible export origins? Were there any arbitrage movements into the regions from the broader global market?
Well, interestingly, not as much as the market participant anticipated. Yes, some Southeast Asian importers tried to secure cargoes from the Middle East, where prices are much cheaper. But because of long voyage time and import duties, many opted to not take those cargoes. We did see cargoes from the Persian Gulf move into Vietnam and Malaysia. Those flows have not stopped, but the volumes have been comparatively lower. Middle East origin bulk bitumen prices have been trading roughly at a discount of about $150 to $160 to Singapore values. The freight cost is at about $150 or lower from Middle East to Southeast Asia, while from Singapore to the same destination, it is somewhere at $40 to $60 or even higher, depending on discharge ports and if it is a multi-port discharge cargo. So on a CFR basis, Middle East cargoes are much cheaper. But most importers in Southeast Asia prefer to import cargoes from either Singapore or South Korea, with a few also trying to secure something from Taiwan and China. But we did see that direct exports from Iran to China increased by about 27% between March and July this year, compared to the same time last year. China's demand for packaged bitumen like flexi bags or tanks and jumbo bag cargoes increased this year, and a few suppliers in Iran also reduced their bulk bitumen supply to allocate more output for packaging. This is because of competitive prices from Iran with tighter export supplies in Asia currently, and about 30 to 50% of the Iranian bitumen imported by China is used as feedstock by independent refiners, who import them as fuel oil products blended with bitumen and are used along with crude oil. An interesting flow during this period would be from the United States to Australia. About 35,000 short tons of asphalt is exported to be discharged into Australia in the coming months from both the US Gulf as well as Atlantic coasts. But market participants are unsure if the flow from the US will continue as the Australian market has been facing some challenges with domestic demand. To paint a picture here, Australian bitumen import in the first half of 2024 fell by 20% against the same period last year. This is because state councils cut road construction budgets in the 23-24 fiscal year. Also, weighing on Australian consumption was a harsher than usual winter this year that hampered any road construction activity, and many importers are cautiously optimistic about a post-winter recovery in consumption, as damage to roads are likely to be more severe than usual because of the harsher winter conditions. But the main problem is the budget, which continues to be limited.
Yeah, we actually see quite similar story in Europe as well, with the budgets being limited. During a beeline from Asia to the Middle East, why are export prices so low in the Middle East?
Well, major exporters from the Middle East are Iran, Iraq, and Bahrain. Iran is the biggest bulk bitumen exporter, and importers in Southeast Asia prefer to import bulk bitumen. They don't like packaged bitumen like drums or jumbo bags or flexi tanks. Iran prices have been low, but Bahrain is still high, closer to the 400 FOB mark, and this has reduced demand for Bahraini cargoes. Now, Iran prices have been volatile. Price movements have been bit irregular, and it is not just fundamentals driven, but also geopolitics driven. Iranian bulk bitumen prices this year have been mostly between 270 to $300 per ton on an FOB basis, with prices very briefly crossing the 300 per ton FOB mark during the second half of July this year. Broadly speaking, the factors affecting Iran values are supply demand fundamentals, feedstock costs, exchange rates, and geopolitical issues. Geopolitical issues impact the exchange rate, and then that weighs on Iran prices, irrespective of how the supply demand fundamentals and feedstock costs are right. Bulk bitumen supply in Iran has been tight, but was countered by limited demand from key consuming India, especially during the monsoon season, which started in June this year. Feedstock supply in Iran has been unpredictable, unfortunately. Of late, we have seen some national oil refineries in Iran not supplying the vacuum bottom feedstock, also known as VB, in the Iran Mercantile Exchange for private bitumen producers to purchase. We saw seaborne bulk prices slip below $280 per ton FOB mark in the second half of September, a level last seen in May. But prices suddenly rose by about $14 to $15 per ton on an FOB basis as VB prices surged on the IME recently. Has this impacted import demand? Indeed, yes, because domestic prices in India are lower because of monsoon, and Indian importers are not ready to purchase at higher levels from Iran. Import demand has been low, but typically importers start placing orders to restock in September as Indian monsoon dissipates in October. Unfortunately, we did not see this trend this year, as many importers took to the sidelines because of the unpredictable nature of the waterborne prices. We are yet to see if this scenario changes, but so far, demand from the biggest importer, India, has been lackluster. Overall, the inflows from Middle East to Asia are likely continue in the near term, provided the price arbitrage window remains open.
The Middle East is also known for exporting packed bitumen to many countries like India, Africa, Southeast Asia, China. But recently, the container freight rate increased significantly. What are the reasons behind it?
Before I answer that, I would like to share some facts for added perspective. Container freight is paramount not just for packaged bitumen demand, but also for bulk bitumen. Let me explain. The markets you just mentioned, Irina, India, Africa, Southeast Asia, and China are very, very price sensitive. India, for example, imported more drums during the last quarter of 2022 and first quarter of 2023. And this was because the CFR value of drums were lower than bulk cargoes. The container freight had fallen to single digits in December 2022 because of oversupply of containers. At the same time, the FOB prices of drums were trading at about $60 to $80 per ton premium to bulk cargoes. Many importers bought drums, decanted them into bulk, and sold in the market. This is as per market sources. So container freight plays a key role in demand and exports of Iranian bitumen. Bulk freight has not moved much. We did see some limited fluctuations because of port closures induced loading delays in Bandarabas, but the rates are not as volatile as for containers. Now, container freights have been increasing since the start of the Red Sea issues. The continuing conflicts in the Red Sea has been forcing shipping companies to limit their operations and have increased their operational costs as well as their insurance premiums. Also, container availability is limited and demand for containers have outpaced supply. This pushed some shipping companies to impose a general rate increase, also known as a GRI, of about $60 to $400 per ton in that particular range per container, depending on the discharge destination, and especially for all cargoes transshipped through UAE's Jebel Ali port. We also saw congestions at Jebel Ali. Shipments to Africa continue to be the most affected because of the Red Sea issue and consequently higher freight. Also, even though demand for packaged bitumen from China has been on the rise and shipping lines have been allocating more containers for shipments to China, it didn't stop them from imposing a GRI for China as well.
Very interesting perspective. Thank you. Moving on, maybe to your thoughts on the outlook. What are your thoughts around the near-term production and consumption for Asia?
Well, for now, market participants expect production to remain tight and consumption to increase. Demand in Malaysia have been firm and prices of tank truck cargoes from Singapore have been steadily increasing. Indonesia's peak paving season is in the last quarter of this year. Thailand's domestic consumption has also been atypically firm because of drier than usual weather there. Vietnam is currently experiencing monsoon and typhoon, but importers there are expecting consumption to earnestly pick up from October. But having said all this, the best person to speak about this would be my colleague Elliot Chan. So over to him. Thanks, Irina.
All right. Thank you so much, Satya, for this. And now moving on to Elliot. Elliot, when we spoke last year, the Chinese market for bitumen looked firm. Has the market outlook changed with the Chinese economy still looking relatively weak?
Thanks for that, Irina. Unfortunately, the same issues that impacted bitumen demand last year still impact this year's demand. According to our estimates, the Chinese market consumed 31.4 million tons of bitumen in 2023, an increase of 1.56%, a significantly lower growth rate than the 6 to 8% before COVID-19. Historically, asphalt demand has been driven by the Chinese government's spending on infrastructure, and therefore, the issue of local government debt, which we identified as an issue last year, still remains a major concern. For context, local governments issue debt through local government finance vehicles, which raise money for infrastructure projects, including highways and roads. In 2023, the Chinese government promised measures to diffuse local government debt risks, but these have had limited effects. However, the central government has continued to push road investment as China enters the last 2 years of its 14th five-year plan. There have been reports of continued highway developments as China seeks to improve its inland connectivity, which aligns with the overall Belt and Road Initiative. These include upgrades to the Shanghai-Chongqing Expressway and other highways to the west to enhance connectivity in Sichuan and the other western provinces. Looking beyond the current five-year plan, there have been predictions that the 15th five-year plan, which has not been published, will shift away from physical infrastructure spending towards digital infrastructure, such as 5G telecommunications, artificial intelligence, and big data. This decision is driven by expectations that investments in digital infrastructure will provide a higher rate of return than physical infrastructure. Depending on how the Chinese government views the difference in expected returns in physical versus digital infrastructure investment, we could see much lower asphalt demand growth after 2025.
Right, interesting. So on the 25th of September, the People's Bank of China, China's central bank, announced its most aggressive stimulus since the pandemic. How do you see that impacting the market outlook?
The recent announcement of stimulus measures by the People's Bank of China should be good news for asphalt demand in the country. Apart from lowering interest rates, the PBOC also announced plans to issue 139 billion US dollars in off-budget special sovereign bonds. So depending on how the funds are used, they could alleviate the local government debt problem described earlier. However, it is unlikely that the central government will be willing to bail out local governments as they have not done so historically. And so we will have to wait and see if the stimulus will be accompanied by other measures to promote physical infrastructure spending. However, the current stimulus is targeted at boosting consumer and business confidence and is unlikely to directly result in an increase in demand for asphalt. As the situation develops, we will provide an update in the December edition of our Asphalt Analytics, which will focus on the Asian market.
Moving on to Japan, in 2023, we see that the consumption declined by 17.2% to 1.95 million tons. Why did that happen?
Yes, so such a significant decline is not the norm, especially in 2023. Most countries continue to grow their demand for bitumen year on year as they seek to finish projects planned before the disruptions caused by COVID-19. So our research found that bitumen feedstock import costs for Japanese refineries have increased due to Japan's falling yen and weaker macroeconomic conditions. These higher costs have also coincided with lower buying capacity for road construction materials. Japanese government's announced road construction budget was only marginally higher from 2022. And so the combination of higher bitumen costs and lower construction budgets has resulted in overall lower consumption in 2023. Looking forward, the cost of road construction materials is unlikely to decline. And from January until September, we do see the cost of road materials still increasing. Japanese market participants have mentioned that the government is now prioritizing maintenance projects for aging infrastructure instead of new road construction. And therefore, we do expect consumption to continue to decline in 2024 and remain relatively stagnant in the subsequent years.
Moving on to Southeast Asia, how has the market changed, do you see?
Indonesia's demand is not expected to grow much in 2024. In 2022 and 2023, consumption in Indonesia grew by 13.5% and 10.8% respectively. However, in 2024, we expect the consumption will only increase by 3.8%. This is primarily driven by roadwork tender delays and uncertainty in fund disbursement. Usually, consumption in the second half of the year is higher than the first half. The first half typically posts lower consumption levels because of a lack of road construction projects. However, we are currently halfway through the second half, and we still don't see this increase. Furthermore, provincial elections in November will further set back tender conclusions and funding disbursement in the provinces. According to market participants in Indonesia, the elections may even reduce the funding provided for roadworks. Our road construction project deadlines could extend to January or February 2025 instead of the usual year-end deadline. This is especially true for provincial level tenders outside the densely populated Java region. Apart from Indonesia, we have not noted any significant policy changes in the region.
Understood, thank you. Now moving to South Asia, perhaps. After the re-election of India's Prime Minister Modi, has that impacted bitumen consumption in India?
So while Prime Minister Modi's re-election will not result in a policy change, it provides stability and continuity in the government's infrastructure development plan. So under the first phase of its flagship National Highway Program, India had set a target of building 34,800 kilometers of roads and highways by 2022. This target wasn't achieved due to COVID-19. However, the remaining construction has been pushed back to be completed by the financial year ending 2028. Prime Minister Modi's re-election ensures that India will continue to seek to achieve this target. In 2023, we note that India's bitumen consumption rose by almost 9% to a record high due to accelerated construction of national highway projects in the run-up to the 2024 election. In 2024, India's bitumen consumption is expected to increase, propelled by pent-up demand from pending national highway projects and state government-linked road projects. This is because in 2024, multiple projects were being shifted back because of the national election. However, India's 2024 national highway construction target has declined compared to 2023. According to a statement from India's Transport Minister, the Road Ministry has provisionally set a national highway construction target of 10,421 kilometers for the financial year ending March 2025. This is down from the 13,814 kilometers targeted for the previous financial year of 2024. Therefore, we don't expect that the consumption in 2024 to increase as much as it did in 2023.
Thank you, Satya and Elliot. It has been very enlightening, this conversation about Middle Eastern and Asian markets. For more, please read our Argus Bitumen report that covers global markets, Argus Asia report, and for the outlook, Argus Quarterly Asphalt Analytics. Thank you, and see you in the next episode.